everyone, and welcome back to this next edition of the Unheated Podcast, a podcast by Theia Ventures, an early stage climate tech venture capital fund based in India. Today, we're delighted to have Purnima Gandhi with us. Thank you, Purnima, for agreeing to be part of the podcast today. Purnima is a director at Temasek, which manages over $300 billion of portfolio affiliated with the Singapore government. She has been with the investment and portfolio team at Temasek for over a decade, focused on energy transition, and climate tech sectors globally. Prior to this, she was at Citigroup in investment banking in London and also at Ernst & Young in India. And she's on the committee of Oxford and Cambridge Society in Singapore. And she actively volunteers and supports charities in India and Singapore and is on the board of Magic Bus, which is one of the largest charities in education and livelihood in India. Purnima has a master's from the University of Oxford and a BA from the University of Delhi in India. So welcome, Purnima. Thanks so much for being with us today.
Thank you, Priya. Thank you for having me here.
Great. I also should mention that Purnima is an advisor to Theia Ventures, our fund. So we're very fortunate to have you and your perspectives and, to have you as part of the journey as well. So just to kick off this discussion, I thought it'd be great if you're perhaps able to give us a little flavor of your views of, the climate tech sector globally, how you think it's evolved from, the perspective or the vantage point you sit at in Singapore, and what you think some of the large opportunities are in this space.
I think it's interesting how we define climate, and everyone seems to have a different view on what is really climate. So some people call it energy transition, some people call it climate technologies. But what is it that we're really talking about? Are we talking about the fact that this is a sector that is positive for the environment, or is this a sector which is is it just renewables are we talking about? So I think the understanding of what is really climate technology is important. A lot of people just understand energy transition or climate as renewables, and I think the one thing to sort of clarify with people is climate technology, or what was earlier called clean tech 1.0, now climate tech, is a very broad space which includes various different pillars. And out of that, one of them is renewables, one of them is energy transition. But there's also built environment, there's also food systems and agricultural systems. There's also circular economy, food, waste, water. And it's a large sort of theme that you're talking about when you're saying climate. And what is interesting in the climate space is that all of these are driven by various different regulatory drivers. So obviously in the US, you have the IRA, which is driving a lot of the investments into certain aspects under what you would call climate technologies. In parts of Asia, every country has certain policies in place, whether it's around mobility, electric vehicles, or renewables policy, which is driving the sector. So the sector is wide. It's not one size fits all. Every country has different sort of drivers. It's a sector, unlike the tech sector, which is very, it's definitely driven by regulatory, which could be a push factor, it could be a pull factor as well. There are carrots and sticks, and as investors, you have to decide if you would want to go into that country depending on what the regulations are or likely to be as well. So from a global perspective, there's a lot of dollars going into this space in the US and Europe, where I feel the demand is in Asia, where we need more investment in this space, and there's not enough dollars going there. But I think the other aspect I also want to highlight in climate is which part of the climate sector are we playing, not just from I discussed some of the sectors, but which part are we playing in terms of the capital perspective as well? Are we playing the VC part or the infrastructure part or the private equity part? But maybe we can delve into that as we go along in this podcast.
Yeah, absolutely. Thank you so much for giving us that overview. And I know you look at so many different regions through your work as well. So I think probably this is a good time for us to discuss, the different stages of capital, or the capital stack, as it were. You touched upon early stage venture capital, which is kind of one of the players that we are and we represent in the ecosystem. But then there's also obviously growth stage equity, there's infrastructure, private equity, and then also debt players as as well, and philanthropy. So obviously climate is a very broad space, and given that it's fairly nascent and we've seen a lot of evolution from the previous 1.0, which was clean tech, do you think that, the businesses that perhaps you're seeing in Asia need a combination of different types of capital, and what would be sort of some of the return expectations for these different stages of capital?
Yeah, I think let's just sort of unpackage some of the capital stack, right? So you have the proven mature technologies in climate, which is, I mean, simplistically put it, says say solar. Solar is a proven technology. The investments in that space most likely are going to be in infrastructure kind of projects, and it's going to give you returns which are going to be like an infrastructure style project. So depending on which country you are, you're going to be in, it might differ, but basically a sort of mid-teen range of return in for equity investors in infrastructure. So that's the proven technologies where you can go scale and you can go big. That's how I would look at that. And investors who want that sort of risk-adjusted, good, safe return, that's where you should be playing. And you can deploy large sums of capital, which is why some of the largest of sovereign wealth funds and infrastructure funds are deploying hundreds and hundreds of millions of dollars there. There's the Brookfield Global Transition Fund, which is investing there. You have some of the large, you have some of these other large pools of capital and infrastructure funds. Then comes the middle bracket where the private equities can play, which is the technology is proven, but there is innovation required in the business model, or in the scale up, or in the growth. And that's where you're thinking about things like electric vehicle and mobility business model, fleet charging, not just pure charging infrastructure, but just business model innovation around that. And that's where the technology is proven, or technology is like you're just sort of innovating on the edge, but it's about how you're going to scale up and grow and grow faster. That's your private equity space to play in, and that you should be expecting returns like the private equity space greater than 20% IRR. And so for those investors who are willing to sort of take that risk, who are willing to sort of take that scale up and growth risk, should be at least it should be investing in this aspect of climate where they're not taking a technology risk but a business model risk. Then the third side, which is where people like Theia operate, is more on your venture capital side, which is early stage, where, and again within early stage, it's also a little bit of a it's a little bit of a distinguishing between how early is early, where you're taking sometimes you have to take technology risks in terms of where the technology is just in the lab. Then sometimes you're taking technology risks where it's there is a pilot, and then sometimes where you're taking technology risks, okay, where there is already commercial. Uh, and in this VC space, there are several points in time where you have to where you could come and invest and accordingly get the required returns. But I want to sort of be careful that this is it's not a typical VC like the tech SaaS VCs, because tech SaaS VCs are easy to scale up, because once you've made a software or SaaS product, it's just basically go out and get the customers. In the climate space, usually you will have a lot of the companies where there is an actual product being built, where there's actual factory that needs to get built, or actual hardware that's built. And that scale up is always harder than just a software scale up. And it's not only harder from the perspective that it's also geographically bound. You actually have to have physical units that you're creating of this. So it's not just something that you can, sitting in San Francisco, roll out to the rest of the world. So that's sort of, and then in the VC space, you should then be expecting according returns. Another thing to be careful in the climate space in the VC area is the gestation period. So sometimes these technologies can take longer, and therefore I'm sure the funds, and that's why actually I maybe want to come back to why I don't think a generic VC fund is the best way to be investing in this sector, because the traits of this sector are quite different from a generic VC investment, and which is why I like more sort of focused VC funds like Theia, because the understanding of the sector, how much time it's actually going to take to grow, to become commercial, is key. And it's not just about putting in money and then hoping that it's going to become the next big thing. So that's sort of the broad stack of, is the technology mature? Fine, it's scalable. Okay, infrastructure. Is the technology there, but you can innovate in the business model? Then it's private equity returns you should be targeting. If the technology is still relatively new but promising, that's where your VC space becomes exciting, but mindful that it still has a lot more nuances than a tech SaaS VC product.
Well, that's excellently summarized. So thank you so much for giving us that really structured kind of viewpoint. And I completely agree with you. The returns and the risk obviously have to go hand in hand. And I'm curious to understand from you, since you've been in the space for so long and exploring it from your position in Singapore, where do you think the next wave of private equity kind of investment will come in? You touched on solar, you touched on electric mobility. Where do you think that kind of movement in a particular sector that is emerging and becoming more mature from the VC to the PE stage or even infrastructure stage is coming from? Is it circular economy? Is it agriculture? Or is it too early to tell? Or is it even hydrogen potentially?
Maybe I shouldn't be saying this, but I'm not the biggest, most excited about hydrogen right now. But I think for a sector which I think should grow, has potential, has the technologies, but it's just not sexy, is the waste sector. I think there is some innovation that's already happened. There is other innovation that should happen in the sector, but I think it's a sector that can the private equity space can really put their money behind it. And there already have been examples where people have had exits in this space, which shows that this space has done well and investors have created value in the recycling space, in the waste space, in uh, sort of high-end waste as well, but even just managing plastic recycling and other ways. So I think this sector, it's just not sexy enough and hasn't got its due attention. After all, it's garbage that you're dealing with. But I feel there's a lot that can be done here, especially in Asia, where it's still quite disorganized.
Yeah, no, I completely agree with you. It's a fragmented space, but there's a lot of innovation that can happen on the collection, on the segregation side, but also on the actual type of recycling, the development, the upcycling, development of granules, and then kind of vertically integrating it with larger players. So I think that's definitely a positive. And we've actually at Theia Ventures we've invested in a battery recycling company, which has really sort of large market opportunity and obviously application of these rare earth materials that go into large-scale batteries for energy storage and also electric vehicle batteries. But coming to the sort of geographical region that we operate in, which is Asia, do you think that, obviously the kind of big pools of innovation or big kind of academic centers of learning and R&D are all in the US, generally speaking, and Europe. And that's where we see a lot of, really cutting edge breakthrough technology like carbon capture, direct air capture, and sustainable air fuels, etc. But do you think that kind of talent and that kind of I would say R&D prowess can really be grown and nurtured in Asia? Or do you think the kind of business models that we're going to be seeing in Asia are going to be more infrastructure driven or more business model innovation rather than that cutting edge science and tech?
I want to use an example. Most of the unicorns out of Asia have been replicas of business models that have already been there. Whether you talk about the Grabs of the world or Olas of the world, there were business models that were already there, or even Flipkart. These are business models already there. They adapted it for the local market, innovated around that. And there's no harm in saying that is probably a good business model for Asia. And because the market's different, you adapt a technology and a business model already existing, and you adapt it to the market, and you will probably get one of the world's largest players in that segment just by sheer numbers. And there's nothing wrong with that. will we get the cutting edge? Hopefully we should try. But and I was, I was in Bangalore meeting your portfolio companies, and I was really impressed with the founders. A lot of them are from the top, universities around the world, worked in top organizations around the world in the tech space, and have come back to India to innovate. So I don't see why there will not be complete innovation in technologies and cutting edge. Yes, Stanford and, especially Silicon Valley does have that sort of ecosystem already there. So you're just likely to see more and easier. It's easier to come out of it because the ecosystem's been there for more than 70 years, generating this ecosystem of founders, professors, innovators, and capital, all interlinked. We in Singapore keep trying to create that here at the universities as well. But that's something that, we just are a few years behind, a few decades behind the US, and that's okay. That doesn't mean that we're not going to have innovation. We're going to have a lot of innovation. We're going to have innovation that's relevant to the market that we are in, and we're going to have innovation that is relevant to the market that we're in. I think that's more important rather than just having innovation.
Mhm. Yeah, absolutely. And as long as there is a ready customer base, for these products and services that are being created by climate tech companies in Asia, as long as there is market in Asia and globally, you're right. That doesn't have to be at the same level of R&D and sort of scientific kind of expertise, potentially, and deep tech that exists in other countries. But I hope that at some point, we can get there, especially in countries like India, where there are really strong academic institutions also that can potentially be at the same level as an MIT or a Stanford. So you're seeing the rise of the IITs, IIT Madras, IIT Bombay, and Indian Institute of Science, etc., which are really creating these hubs of climate tech expertise and learning. And that actually brings me to my next question: is that when you're thinking about kind of expanding outside one's kind of local environment, for example, building a asset-based climate tech company, let's say a battery recycling company or a biomaterials company, etc. What do you think are the sort of considerations that some of these founders have to make? So obviously building in Asia gives you an advantage on cost, on labor, on manufacturing equipment, etc. But in general, one of the biggest markets in the world to actually sell products is the US or Europe. So do you think that founders that are building in Asia should actively be thinking about creating those go-to-market strategies outside Asia, or do you think there's enough demand with corporates and sort of the same kind of regulation in Asia that's pushing for net zero, that these companies would not need to look outside their borders?
It depends what subsector we're really talking about. Is it like a consumer product that needs to be sold? Then fine. I think US is a great market. It's just at a different level in terms of consumer product. But for most climate tech companies, if it's innovation, like for the kind of companies that Theia VC has, whether it's in terms of battery recycling or in terms of EV charging, I think Asia is the right market, and that's where the innovation is applicable, and then they're tailoring it for the Indian market or the Asian market. And I think India is a really good place to start with, just because you get so much scale in one go versus a lot of other Southeast Asian countries. So at least for most of the climate tech, unless it's a more B2C product, I would actually imagine that India is a fantastic place to be growing, and you could grow for a long time in several rounds of funding before you actually need to go outside of India. And I think where we are seeing, you're going to actually see it the other way around. You're going to have a lot of international companies now coming to Asia, trying to innovate in Asia and trying to roll out for the market here, because just at the sheer scale of what is required, where the gap is, the inefficiencies in the market, as well as the actual impact that you can have in Asia is just a lot larger.
Yeah, no, absolutely. And how do you think that the kind of Asia level corporations are going to respond to a lot of these climate tech companies trying to sell them products and services, etc.? For example, in India, we've seen many of these very large companies like Adani and Reliance and others being very excited about integrating some of these startup solutions in their overall operations and being ready clients, and then potentially at some later point they can vertically integrate and take over some of these companies. But do you think that's broadly applicable across different countries in Asia? Do you think that the corporate sector has become aware and receptive to new innovations?
I think there are two different schools of how innovation works. One is the US school, which is it's very private market funded. Innovations happen. It's funded by the private market for several rounds of funding till it becomes very large, and then hopefully it IPOs. But it stays in the private market for very long. Then this is what at least I've observed in through my experiences going for a lot of these early stage venture fairs in Europe, that Europe school of innovation is a lot of the founders startups start, and then soon the corporates buy them out. The corporates are the ones, the large corporates, the Swiss corporates, the Germans, the French. um, they have a very good understanding of the sectors that they're in. They've been in that sector for probably 100 years, and they're always at the watch out for looking for new innovation coming, and they'll try these products, give them some revenue for these startups, and then when they see that the right point that this is a good fit for them, they will actually buy these startups out. So that's the second round of the second school of innovation, which is more sort of corporate run, but then they buy these startups and integrate them into their corporate machinery, and just build it as another service line or another product line. Where India goes will be interesting to see. India has a thriving public market, so that avenue is also there, that it can stay in the private market and then actually doesn't need to stay too long, because the IPO market is great these days and it can just IPO and access that market. I think that option is there for India. The second option is, yes, the startups will be there, but all the corporates are now looking at, whether it's mobility or renewables or hydrogen. A lot of them are looking at this space, the corporates, and so there will be an avenue for the corporates to either engage with them, to use their products, or eventually even buy them and do sort of small bolt-on acquisitions. So I think India, we don't know the answer yet. It could go either way, or it could be a great blend of both. But the other thing which is going to be there in India is the corporates also have ambition to be the number one in their sector themselves. So they might just buy and just build, like Adani's now going to become the largest renewable player. You might not see a lot of the smaller ones, because the big corporates might just want to be the number one themselves, and they'll just consolidate the market and put their capital behind and their balance sheet behind the sector they like.
Yeah, that's also fair. It'd be interesting to see where India heads for the next decade or so. And I think it's great that the climate tech kind of push in India has come after 20 years of the regular VC industry, kind of going through cycles, and also now, as you mentioned, a very active IPO public markets kind of exit opportunity for many early stage and growth stage investors too. So I think my next question was just around, the regulatory environment. As we mentioned earlier, the U.S. has the benefit of the IRA, at least for the last few years, and really kind of helping to subsidize certain very asset-heavy sort of sectors, and then give them wings to essentially become more commercial and get access to commercial revenue faster through maybe credits or that kind of market levers. And India and other Southeast Asian countries have obviously had the benefits of solar subsidies, and then now lithium-ion cells have been subsidized in India specifically, and kind of encouraging larger fleets to go electric. But do you think that what would be the future of some of these kind of subsidized models? Do you think we're at a space, because for solar, it took us a decade for solar to actually be either equivalent to coal-fired grid kilowatt hour prices, or slightly lower than that. But it took a long time to get that adoption. With EV, it's taking a little less time. But then as we go and as the urgency of the climate question gets higher and higher towards 2050, and obviously weather patterns, etc., and temperatures rise, we can't have a 10-year period where it takes so long to adopt. So do you think that companies and countries rather will become much faster to adopt once a subsidy is in place, or how much money really needs to go in from the government to push adoption?
The topic of subsidies is interesting because I sometimes feel people use it as an excuse or a crutch. Private sector says we can't do anything till we get the subsidies. Government says we don't have the money. We need private sector to do it. So it goes round and round and results in no action. And I think that's the worst for the climate sector. No action is I think my biggest concern, because then we're just going to be in this "it's your problem, not my problem." Private sector passing the baton to private, public passing it to the private and back. I think there are enough innovations, there are enough technologies, and enough scale that we as a sector can survive without subsidies. There are some asset heavy sectors like hydrogen and ammonia, etc., which probably could benefit from subsidies. But there's enough that we can do that don't require subsidies. And I think that's where the private markets should be focusing on. There is an angle for role for philanthropy as well to catalyze investments in this space. There's an angle for governments to catalyze investments in this space. But I think that's no excuse to say that there's not enough for private markets to make money. And if the private markets' main driver, let's be quite clear, is returns, then I think we should just talk about the space that where we can make returns and show examples where people have made returns and people have had exits, and it's not, and people have had enough exits in Asia as well. Um, in some of these climate sectors. So I feel, yes, subsidies is important. It's great. It catalyzes the industry. It was actually the German solar subsidies probably 25 years ago that resulted in the scale that solar went, and that's how it got cheaper, especially when China started manufacturing. So there's a lot of, yes, subsidies plays a role, scale plays a role. Low cost manufacturing played a huge role in solar. But I think if we just keep waiting for subsidies to come, we will not be able to do anything. Where we should be spending our time is on innovation in terms of the business model. How can we do this such that we get scale? How do we do this such that we're solving problem? How do we do this such that we can actually have exits in this sector, that it looks as a promising sector, that other people want to put money into this sector, and it's not a sector that is only sort of, the impression that people have is this sector is either it's a sector that doesn't make money, or if it's the sector is meant for DFIs, or the sector is meant for philanthropy, it's not for commercial investors. So I think those are the perceptions and the track record that we need to see, I think, which will play a better and a bigger role than just subsidies. Because just as an investor, I can tell you, if it's a sector which requires subsidies, I will be very wary, because I also know just as quickly as subsidies are put in, subsidies can be taken away as well when the next election happens. So as an investor, subsidies only gives me comfort for that whatever 4 or 5 year period. And beyond that, I will still have the question mark and the uncertainty. So that's not something that is I can solve, or and it'll always remain an uncertainty. So I'd rather have a more resilient business model where I don't have to depend on subsidies, but I can still show a good exit or a good return on my investment.
Absolutely. No, I think that's definitely a great point. And I think as we are sort of coming to the end of our discussion, maybe just a couple more questions that I wanted to ask on your view. So it seems like you're very encouraged by the early stage activity that you've seen over the past few years, both in the US and in Asia and Europe, of course. And do you think that, the rise of these emerging managers that are taking the risk and looking at climate tech is going to play a very big role in kind of shaping the sector as a whole? Or do you think that eventually, some of these larger funds, VC funds, growth stage equity funds, they will all begin, they've already started, climate tech verticals in their, in their mandates, and then they will eventually kind of weed out some of these specialist funds? So do you think it's always relevant to have specialist funds in the mix, in the capital stack?
I think more the merrier. More investors, the better it is for the sector. If it's generalists who are trying to get into this, great. I'd only say come with eyes, ears open. Um, and hopefully people don't make the same mistakes that happened in clean tech 1.0 in the early 2000s when people just put in large bets on very capital intensive projects. If it's going to be specialized funds, I think there will always be a space for that. There'll always be a space for specialized funds within it. But I think it's going to be more. I don't think it's so much about specialized or non-specialized. It's about the experience that you have in this sector, and it's about taking the learnings from that. Hopefully, not making them same mistakes again. But yeah, more the merrier. So if you can have more funds in this space, better exits people can have, more funds at the VC level, better exits for them. And then if the more people coming in at the PE level, there's better exits for the VC. So there's room for all. Just that people should be mindful of the returns and the expectations and the challenges sometimes in this space.
Yeah, absolutely. That's great to hear. And I think, one of my last questions is really sort of where do you think the future is going to be taking us? So do you think that we'll really be kind of future ready when it comes to the amount of capital that's needed to go into this sector as a whole? Also thinking about countries like the US, et cetera, where there's already an abundance of capital, but there needs to be more capital coming into emerging markets, for example. Do you think that we are going to beat we've already breached the 1.5 degrees, but for example, the 2-degree mark that is coming up, how sort of effective do you think this kind of VC and PE ecosystem is in encouraging technologies, breeding these, and putting capital into them, so that we can eventually, as a larger kind of global group of nations, really address climate change?
I think if you're going to ask, if your question is it going to be enough capital to tackle climate change, my answer is very simple: no. Unfortunately, no. Is the intention there? I think globally, yes, the intention's there. Is there enough action? I think no. There's a lot of talk. There's a lot of talk on philanthropy. There's a lot of talk on blended finance. There's a lot of talk on private markets. But eventually the action has been slow. And I think that there's different reasons for it. One, because this is one of the few sectors that actually depends on regulatory framework. And I don't mean subsidies. It just needs a conducive, steady regulatory framework to be there, to be able to, for a private investor to take the risks for the business that they're entering. So this is one of those few sectors which regulatory frameworks are important. The second important part of this sector is that there unfortunately hasn't been enough talk about returns and exits. And so there is still hesitation for people. Oh, is this a sector that can you really make money? Eventually, if private markets are putting in money, they do want some commercial return. And so the question that they will always have is this a sector that you can make money? So I think as a sector, everyone needs to talk about be more transparent in talking about their success, in talking about their failure, in talking about their learnings from these experiences, because only then will this sector grow and become as normal as just say as your fintech or healthcare sector, where you'll have enough investments in this for this, not just because it's good for climate, which it is, but it's also because you can make money from it. And I think till we get there, and I hope we get there in the next couple of years, we are still going to have a little bit of hesitation in putting dollars to this. In all our conversations with people, I they always ask like, "Oh, can you really make money in this sector?" Um, and so I hope we get to a point where the answer is a resounding yes, and with enough traction and exits to show that people don't actually need to ask this question.
Yeah, absolutely. And just a quick follow on to that. I mean, I know that we've talked a lot about AI and machine learning and all the hype that goes behind artificial intelligence, but do you think that integrating new technologies like AI into climate could potentially give the returns that investors are looking for and make these technologies more commercially viable?
I think the biggest opportunity from AI is going to be the fact that you're going to need that much computing power, which means that much energy, and that means you need to figure out a way to have that much green energy. I think that's a huge shift for renewable energy, and just the fact that you're going to need to figure out a solution for having more green energy. So I think that to me seems like the biggest challenge, because when we were looking at our power demand models earlier, it was relatively flat for the developed world. But now with AI, you're not going to have flat power demand, and going for the next 5 years, it's going to be increasing power demand. And that was never there earlier. So being able to actually have green energy to fund this whole AI is I think one aspect of it. Second is, can you actually have it in some of the use AI in some of the products and technologies and in the climate space? Absolutely. We could and we can and we should where it's possible. I would still be wary if people just use the word AI just for the hype and trying to get better valuations and riding the hype. I'm still not the biggest fan of that, because the tech sector goes through its different phases and hypes. I would still be wary if a climate tech company says, "Oh, we're using AI just for the sake of it." So I would tread that there with caution. But if it's something that can help make the product better, or if it can help get to the innovation through use of AI, for sure. I see relevance there.
Absolutely. Well, that brings us to a close for this conversation. So thank you so much, Purnima, for all your incredible insights. And we're really fortunate and happy to have you with us today, and obviously as an advisor to our fund as well. And we look forward to continuing the conversation with you next time. So thank you for joining us.
Thank you, Priya, and good luck to Theia, because you're fighting the good fight. It's a good sector, and there's a lot of innovation, and I think it's super exciting. And I think the fact that you guys are focused on India, that's where I see a lot of the excitement happening over the next decade. So good luck. Thank you for having me.
Thank you. Thank you so much.